Whoa, Randy Chambers here, and in this video, I'm going to share with you a secret strategy of how you still can obtain a competitive mortgage rate even in this current market as of this video, July 6, 2022, without using an ARM, right? Without using an adjustable rate mortgage. So listen, we're going to dive right into it shortly, but before we do so, remember, knowledge is the new money, so get you some. Let's roll. All right, welcome back. I'm Randy Chambers, a financial coach, mortgage consultant, and real estate advisor. And as promised, I'm going to dive right into the information. What's the secret strategy of obtaining a competitive home loan interest rate in today's market, right? So first, let's talk about ARMs, A-R-M, adjustable rate mortgage. Now this strategy is not about ARMs, right? But I gotta touch upon it so you're aware of this. It's a tool, it's a research, and it's just that, it's a strategy, right? So they have pros and cons, everything has pros and cons. But you gotta be educated about it if you decide to go that route. I'm not saying nothing wrong with it, I'm not saying something right. All I'm saying is just be educated about it to see if that works best for you and your family financial situation. So listen, a pandemic that just moves in, right? People was getting laid off, furloughed, people forced to stay at home. Renters wasn't able to pay their rent payment. Landlords wasn't able to collect rent payment so they could take that money and pay for their mortgage, right? Because think about that. Most of your landlords who you rent from has a mortgage on the house too. So you can pay for their mortgage and put money in their pocket, because they're not doing this for free, right? They're doing this for a profit, right? So if you can pay their mortgage and they pay their mortgage and keep money in their pocket, then you can pay your own mortgage. Okay, I digressed a little bit, I get it. Let me get back. So listen, let's talk about these ARMs, right? So a lot of real estate investors had these ARMs, right? And what happened is, in the point of that they needed some relief, the rates for their mortgage adjusted. It adjusted down, right? So when they couldn't pay their mortgage payment, right, it adjusted down to allow them some relief so they can pay their mortgage payment, right? So that was a good thing. A lot of real estate investors kept their house. A lot of homeowners who had the adjustable rate mortgage on a personal primary property, right, was able to save their house. Then in 2009 and 2010, it worked the opposite way, right? We had the market crash. There was a lot of variables that went along with that. Don't get it twisted. But the perception was a lot of the rates adjusted and adjusted up, right? And people couldn't afford the rate increase, and so they started to lose their home through foreclosure. So I'm not talking about adjustable rate mortgages, but I'm saying that it's a strategy. But we're gonna talk about fixed rate mortgages, right? 20 years, 15 years, 30 years fixed rate mortgages, right? Now for my VA people, right, you're in a good position because VA, you still gonna get some good compatible rates with VA, and we do VA loans, right? I see it every day, right? But I'm particularly talking right now FHA and conventional loan. So here's the secret strategy. Here's the sauce I want to give you today. I want you to take this away. Seller credit. Seller concession, that is known as well. Randy, what is that? Like this is what it is. When you're going to purchase a home and you submit a purchase offer in writing, right? You can ask the seller to contribute to some of your closing costs and your prepayments. What is closing costs? Closing costs, for example, is the attorney that you hire, the title settlement company that you hire, or the notary, right, that you hire to do research on the title, the chain of title, to all the paperwork, and they charge a fee for their service, right? So the seller can actually pay for their fees. Let's say it's $2,500, $3,000 for their fee. The seller can contribute to that. That's closing costs. Prepays are items that you pay 12 months in advance. For example, insurance, flood insurance, hazard insurance. Let's say you get a quote for your homeowner's insurance or hazard insurance for $2,500. Well, that must be paid at the time that you're closing. You signing all the documents. The insurance company want their premium up front, right? Flood insurance want their premium up front. So let's say you had flood insurance for $1,100 or $1,500, but the seller can contribute to some of that cost. Now that's not the big secret, right? But I wanted to set the stage properly for some of you guys that don't even know that even exists. But here's the secret, that the seller themselves can contribute to points and fees. Let me say that again. The seller can also contribute to points and fees. So if you're in a position right now in your financials, right, and you're at a 6.125 interest rate, right, and you say, listen, I would like to buy down that interest rate, right, through points. how much it would cost me to buy from a 6.125 to maybe a 5.5, 5.25. For example purposes only, let's say that is $8,000. Let's say if it's $5,000. Whatever the cost is, the seller can't contribute to that. So that's how you're gonna get a competitive interest rate, by buying down the interest rate without you coming out of your pocket for it, because the seller doesn't contribute to it. Now listen, this is not a guarantee the seller gonna give you anything, right? This is a negotiable. But if the seller is motivated, I've seen this happen in the past. I use this on my own personal real estate investing, right? My clients have used this strategy that I taught them about, right? So listen, it works. It's proven it works. So if the seller agrees and say, yes, I'm willing to do that, then guess what? You got your closing costs paid for, your prepaid item paid for, your fees from your lender to pay for. What is your fee? Might be an underwriting fee, right? $9.99. Might be a processing fee of $4.99. They can pay for it and pay to buy your interest rate down. So listen guys, I hope that information was helpful to you that I just shared with you. Do me a favor, like this video, comment on this video, share this video, text it to somebody else, get that word out of how you put yourself in a position to still buy a home. So listen, if you would like to talk about this market, why the Fed is doing what it's doing, why inflation is here, I'm available. As you already know, you can go to ChambersMortgageGroup.com. You see it coming across the bottom, or simply pick up the phone or text me directly at 504-270-2783. God bless and enjoy the rest of your day on purpose. And I mean that. Take care.